Our next guest is a market watcher who says President Trump will rip up the Iran nuke deal. He also said the risk of a trade war with China is real. Jack Ablin's with us with Cresset Wealth Advisors. So, Jack, let me get this right. You are more worried about geopolitics than you are about rising interest rates, correct?
Yes. I think that the rising interest rates are really just trying to get interest rates back to fair value. But some of these geopolitical risks are risks that come over the transom. A lot of investors aren't factoring in right now.
But we've had constant geopolitical risk, and we've had frequent tweets from the president which are, kind of stirring things up, to say the least. None of that stopped this enormous rally from 18,000 on Election Day to 26,000 in January. Why should geopolitics suddenly become such a major concern?
Yeah, I think investors have done a pretty good job shrugging off a lot of the tweets, especially, the most extreme. If you recall earlier this year, it was really threat of a trade war with China, this tit for tat back and forth. That upset the stock market, certainly the second time, and pushed the S&P back down to its 200-day moving average. So I do think investors are worried about it, but I think the more they hear the tweets in the background, the more likely they're going to ignore things. And I think, at least from the trade perspective, I think it's not something that they should probably ignore.
If these big tech companies this week report really good, solid profits, is that a sign that the overall market might actually go up some more and we could be okay with buying some more stock now?
Yeah, great question. I think if you strip away the noise and just look at the S&P 500 and look at earnings and revenues, we're on a great track. This is the first quarter in my memory where analyst estimates were actually rising going into the first quarter earnings season. And what I find most remarkable is that nearly 70% of companies reporting have beaten on the top line. That's not a tax thing. That's a growth thing. And that's good news for stocks. And I think relative to at least the next 4 quarters, S&P is somewhat underweighted because of some of these concerns. And like I said, if we could strip away that noise and assume it's not going to happen, the stock market would be probably 10% higher than it is today.
Whoa. Well, maybe we'll get some good news on the geopolitical front and we'll go up 10 or 15%. You never know, Jack. You never know. Look on the bright side.
I'll keep my fingers crossed.
Jack Ablin, thanks for joining us, sir. We'll see you again soon. Thank you very much.